volatility has continued this week in the stock market, with the Nasdaq 100 down 2.75% so far on the week, with the S&P 500 down 1.7%. If we take a look at the daily chart here, we can see the size of the candles. The distance between the high and the low is much larger than normal, highlighting how volatile the recent trading sessions have been. The sharp reversal you see here is following the Fed statement this week, where the central bank signaled a rate hike in March. This was expected. However, the selling really accelerated when Fed Chair Powell spoke about multiple rate hikes. This is what really got the selling going. Now the Nasdaq is currently down 16.5% from its all-time high made in November 22nd last year. You can see here in the chart, the Nasdaq actually confirmed its downtrend from the start of the year as price broke below and confirmed below the green trend line. So what is next? And what am I looking for and watching? Firstly, if you look at the last few daily candles, each one of them have a topping tail, suggesting the selling isn't over. Now this is widely debated, as some believe sentiment is so bearish that a bounce or a relief rally is likely. Whilst this is possible, price has not shown any signs of a bottom just yet. For example, have a look at this chart. Now this was posted on social media. It shows that on Monday this week, there were 1,353 new 52-week lows in the Nasdaq. This was the third highest on record, only surpassed by the March 2020 pandemic and the global financial crisis. This is not what we would typically see at a bottom. So what are the key levels I'm watching? This is the weekly chart. On the downside, I have 14,480 to 500 as the next major support level. Now, if bulls want a shot at a rebound or a rally, this is the point to execute it. If that fails, we could be looking at a dot-com style melt-up with price heading towards 12,520. Any rally where price closes below 15,330 is simply a relief rally. This is where the 200-day moving average is currently at. And without reclaiming that, the bears remain firmly in control. Another chart to watch is this one. This is a chart of the FANG stocks. So Facebook, Amazon, Netflix, and Google. These four companies alone equate to 20.4% of the Nasdaq 100. So the Nasdaq will struggle without participation from these big tech companies. You can see in this weekly chart the same breakdown as the Nasdaq. Now if you add Apple to the equation, that's nearly a third of the Nasdaq 100. So watching these 4 or 5 names closely will provide more clues as to whether the selling is done or not. With that said, focus on price action with key levels in mind, because that ultimately is what moves the P&L. It's important to block out the noise because there is a lot of it, and we're in a period of uncertainty in the sense that the stock market has not decided on a clear direction, hence the volatility. If in doubt, do nothing, because earning zero is better than earning negative or losing money. Thanks again for watching. Remember to hit that subscribe button so you don't miss future content. And I'll see you at the next one.